If we go onto the Chase Bank's website, you'll see that what's considered a good debt-to-income ratio is 43%. You've heard me talk about this. A 43% debt-to-income ratio means that the banks are willing to lend you money generally up to 43% of the amount of money that you're making pre-tax. So if you don't have any other debts, you could, in theory, go out and spend 43% of your gross monthly income pre-tax on just your housing costs. Now, you don't need to be a financial genius to calculate that if you're spending 43% of your gross income pre-tax on your housing costs, and then you have to pay taxes, and then you have to pay for all of your other expenses, you're not really going to have much money left over to invest and save to build your wealth, which is why you don't want to blindly follow the bank's spend first guidelines, and instead you want to build your own guidelines, which force you to invest your money and save your money first, and then you spend whatever's left. And this brings me to the fifth factor, which is what type of loan are you trying to qualify for, because different loans are going to have different qualification rules. There are 5 main general categories of loans that I'm going to talk about today. You have the conventional loans, you got the jumbo loans, you got the FHA loans, you got the VA loans, and then you got the USDA loans. Let's start by talking about the conventional loans. If you get a conventional loan, the general rule of thumb is that you're going to have to put down 20% as a down payment to get and qualify for a conventional loan. Now, does that mean you have to put down 20%? No, that's the general rule. You can put down a lower down payment, a significantly lower down payment, but because most conventional loans are not backed by the government, if you do not put down 20% as your down payment, you're going to have to pay an additional fee or fine called PMI, private mortgage insurance. And what that means now is if you put down a smaller down payment, let's say you only put down 10% to go out and buy a home. Well, if you put down 10%, you are a bigger risk to the bank of foreclosing, because if home values drop and you lose your job, well, you might be underwater on a home and you might not have the same ability or interest to continue making your payments, which means you are a higher risk of foreclosure. Now, to protect the bank from a foreclosure and the cost of foreclosure, the bank will get insurance on you. But the insurance that the bank gets is paid by you, not the bank. That's what PMI is. So if you get a conventional loan and you're putting down less than 20%, you're going to have to pay for your mortgage, your property taxes, and then PMI on top of that. But once you hit that 20% equity, the PMI will generally go away. A jumbo loan is also pretty self-explanatory. If you want to borrow more money to go out and buy a home, you're going to get a jumbo loan. The size of the jumbo loan is going to depend on where you live, on what qualifies for a jumbo loan. Some areas are more than others because New York is much more expensive than, say, rural Idaho. But if you want to borrow more money, you're going to have to get a jumbo loan. Jumbo loans generally have higher down payment requirements and a little bit stricter on the credit score requirements, because if you're borrowing more money, banks want to make sure that you're a good investment. The third type of loan, and another very popular type of loan, are FHA loans. FHA loans are loans that are backed by the government. And because they're backed by the government, you have easier qualifications in order to get approved for an FHA loan, because if you were to default, your bank is not the one that's going to bear the burden of that. It's the government, because the government will put in the backstops and pretty much guarantee your loan. If you want to qualify for an FHA loan, you generally have a minimum down payment requirement of 3.5%. But you also have an insurance fee that you have to pay with FHA. But unlike a conventional loan, if you get an FHA loan, that insurance fee or payment that you have to make does not go away once you have 20% equity in your home. That insurance payment is going to stay for the life of your loan unless you refinance into a conventional loan. But generally speaking, that insurance payment will stay there for the life of your FHA loan. Then you have the VA loans. This is for current and former military members. The VA loans have a lot of special perks because you served in the military. One of them includes that you have the ability to have 0% down payment mortgages. Plus, you don't have to worry about paying PMI or anything like that. And they have a little bit of easier access in order to qualify for a mortgage. Plus, sometimes you can also get lower mortgage rates with a VA loan. And then you have the USDA loans, which was kind of an incentive created to encourage people to go out and buy homes in rural areas. And they're also there to help people in suburban areas who are very low income. So if you are low income in a suburban area, or you're looking to buy a home in a rural area, you can potentially qualify for a USDA loan. USDA loans also have that same benefit where you can potentially buy a home with a 0% down payment. So now you have a lot of different options out there. Talk to a smart mortgage broker to see what's the right option for you. The most important thing isn't what type of loan that you get. It is that you can afford your monthly payment. It's that you can afford the down payment and that you can afford the move-in costs. Because if you're going out and buying a home just to buy it, and now you're sacrificing your ability to build wealth by investing your money and saving your money because you're living paycheck to paycheck just to make the monthly payments in your home, you're doing it the wrong way. The key to buying a home the right way is that you can buy a home that you can afford, that you can live in, and that's not going to sacrifice your ability to build wealth. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.